Welcome to this video lecture on walking through the cash flow statement. For this presentation, what we're going to do is, in your course shell, there is a link to an assignment for developing your cash flow. We're going to kind of walk through some of the important parts of the Excel spreadsheet that you'll be using for that. And so when we pull this up, one of the first things I want to make sure that you do is go in here and enter your business name. And so you're going to, the first thing you're going to do is enter your business's name. You're going to put your starting date. And so that can be your fiscal year. You may identify this as, okay, I'm going to be starting your business February 1st, 2014. You can identify a cash balance minimum alert. And so you want to say, if I've got less than $1,000 on hand, that's where I want to start off at. All right, so then we're going to deal with cash on hand. This is in your startup category here that I've added. The one thing that you need to look at, this is going to identify how much money I am starting with. And so what is my balance the day I begin startup? If you notice here, when I put February 14th, just go back here, it automatically filled all the months to go for that specific year out. So now when I come in here and I look at cash on hand, I'm going to start with $5,000. And so you can see this all fills it out automatically, and I have pre-programmed the spreadsheet for you for your ease of use. Under startup, I'm going to have zero cash sales because I'm not even open yet. And then what I'm going to do is like, okay, what I generally do is I will block out returns and allowances, because that is something that probably isn't going to be specific to your business. And interest and other income, if you are providing, if you're giving credit, you may earn interest based on people's when they pay you. Loan proceeds are going to be specifically talking about money bringing in from after you apply for a loan when you receive that money. And so I generally will put that under startup. And so let's say I got a nice sized loan, $250,000. And for startup, I put in owner contributions of another $5,000. All right. And so my total cash available is $260,000. Now from there, what I'll do is I go to cash paid out. Cash paid out is going to be specific to anything that I am doing for expenses for my business. Under startup, so I'm going to identify, on startup, I may be renting a office space for $1,000 that month. Under here, under other expenses, I gave you some room so you can customize that. And so I might put one under computer software, etc. And so I'm going to buy a laptop computer, a printer with some software, and I might say that's going to be $3,000. I'm going to, if I'm traveling for my business, I might say my car payment of $435 a month is in there. Any supplies that I think I'm going to be spending that's not involved in the resale of the product. So these supplies don't go into the cost of goods that I'm producing. And so that could be anything else that isn't deemed those items. And so let's say for startup, I'm going to have another $5,000 in there. I'm going to start advertising. We're going to spend $3,500 in advertising. Interest expense. How much interest do I have on my loan? And so my interest expense for my loan, let's say I'm rough estimating, I didn't do much research on this. Let's say I spend $500 on interest, so that way I know I have that as an expense. So here's another one that I might come up with down here. We've identified interest higher up. Now once I go down to below the subtotal, my loan principal payment. And so let's say my loan principal payment is $1,500. Any capital purchases that I'm making on this for this product, for this business, and so I might say that I'm purchasing something that I'm not going to use again. So maybe there's a piece of equipment I need to run my specific business, and so I might have $25,000 there. Other startup costs, just buying equipment and some other items, I might say I have $10,000 there. Owner's withdrawal, to reserve and or escrow. You always want to have a reserve fund that you're kind of building up. And so I might say, I might want to spend $1,000 a month to put into reserves. And so I can start to put that information in for the next period. And then owner's withdrawal, how much money. Now you can do the owner's withdrawal in one of two places. If you are a sole proprietorship, you can put your salary under owner's withdrawal. If you're a limited liability corporation or a corporation of any kind, then you are going to put the owner's wages in here. And so I'm going to pay myself $36,000 a year. And so I might pay myself $3,000 in wages during the startup period. So I spent $20,000 and I didn't bring in any money. All right. Now, if we look at this, now we understand why it's essential for us to plan out effectively our startup. Because if I'm wrong on my startup date, and so I started incurring all these expenses, I've got a bank loan, I've got property that I'm in. If my startup date isn't February 2014, let's see what happens. And so if that is the case, I don't know, I'm not going to be able to open up in February. So, cash in, I'm done. All right? I might have a contract that I'm spending $3,500 in advertising. Got to spend that. Bank loan, got to pay that. That's $500. Got to pay $1,000 on my rent or my lease. That's still there. Ooh, car payment. Still got to pay for the company vehicle. I might still have to buy more supplies. So let's assume if I low end that at $1,000. Wages, still got to pay myself if I don't have anybody else. Maybe I found some more software that I need to buy, so let's do another $1,000 there. Now again, this is without really looking at an in-depth breakdown of all my expenses. This is just off the top of my head. Oh, got to pay for my loan. And so I lost $7,900, almost $8,000, because I didn't do an effective job identifying and planning out when I was going to open. And so now this was giving you, hey, I've got a lot of money available. Well, now it's less than what we had before. And so what you're going to do is you're going to continue to do this for each individual month. And then at the end, you'll identify your total cash flow.